So what's really going on with home prices here in the Grand Rapids area? Watch this video and find out. Welcome to the Grand Rapids, Michigan, Kent County Residential Real Estate Market Update with data through May 2023. My name is Rodney Constable. I'm a realtor with 616 Realty in Grand Rapids, Michigan. Year over year, the average home is up 2.64% in the Grand Rapids area, and the current average selling price is $353,818. For years, I've heard people saying things like home prices can't continue to go up. Well, when I hear things like that, I think about the input costs to building a home. And some of the major input costs to building a home are land, labor, materials, and regulatory costs. So if somebody thinks that home prices cannot continue to rise in the future, what they're basically saying is that land is going to get cheaper and more plentiful. Labor is going to get cheaper and more plentiful. Materials are going to get cheaper and more plentiful. And the government's going to make regulatory costs of building a house cheaper and easier. And guys, when we just think about these four input costs, land, labor, materials, and regulatory costs, do we really think that any of these input costs to building a home are going to fall in the future? I doubt it. So if land, labor, materials, and regulatory costs are going to continue to go up, then home prices probably will continue to rise in the future as well. So we know for the first 5 months of 2023, the average home here in the Grand Rapids area, right, we're focusing on Kent County, has sold for $353,818. When we compare that to where we were for the first 5 months of 2022, we can see that the average home was selling for $344,718. So the differential is that we're up an average of $9,100 this year versus where we were last year for the first 5 months. And on a percentage basis, that's the 2.64% differential. Now, I have 8 years of data here on this slide. So let's go back, let's go down to the bottom of the slide here, 2016, and kind of work our way up. So the first thing, let's just glance on the way up, right? And just look at those numbers. We started in 2016 with the average home for the first 5 months of 2016 selling for $188,265. And then you can see year over year, the home prices have continued to go up. Again, part of that is land, labor, materials, regulatory cost. All right. The other thing that's happened, guys, across the nation is over the last dozen years or so, we have underbuilt homes relative to household formation. Of course, household formation is people getting out of high school and college and getting into a relationship, moving, out of their parents' basement, moving in together, perhaps getting married, having children, whatever that, that household formation may look like. But that's the demand. That's household formation. Okay. And you need a place to live. But the point is, there's, each year, as the population in the world grows, as the population in the United States grows, as there's more and more households, right? Couples coming together, people, wanting to live together and form families. This is household formation, and that continues to drive the demand for housing. But we've underbuilt since the Great Recession, if you will, of 2007 through 2009, where a lot of that, of course, was really related to residential real estate. The builders have not built enough new homes to keep up with the household formation. So there is a dearth, there's a lack of homes, new homes, right? And of course, as homes age, right, they have to be replaced. Some homes burn down, some homes just become decrepit and have to be replaced. So there's a replacement rate as well as the need for keeping up with new household formation. And we just have not built enough new homes in the United States for the last decade or so. And all of this, right, along with land, labor, materials, and regulatory costs going up, all of this is contributing to this upward pricing pressure on homes throughout the United States, but especially here in Grand Rapids, right, where it's a good place to live, people want to be here. And by the way, guys, even at $353,818, that is still much lower than the average price for a home across the United States. So on a relative basis, Grand Rapids is still one of the lower cost areas to live in the United States, all right? But you can see year over year over year, home prices have continued to creep up. Now, at 2.64% year over year, that is a lower increase, right, on a percentage basis than what we've seen in previous years, right, in a lot of the previous years here. But still, home prices continue to go up in the Grand Rapids area, and there's nothing that I see in the data that suggests that we're going to go in the opposite direction anytime soon. The average home is selling after being on the market for just 15 days. When we compare that to the inventory of unsold homes, we can see that those homes have been on the market for an average of 62 days. What these two data points tell us is that if a home is properly priced, it will sell in a relatively short period of time, right now in just over 2 weeks. However, if a home is not properly priced for its location, condition, and amenities, it will stay on the market for an extended period of time, right now at a little over 2 months. So even though we have really low inventory here in Grand Rapids, right, in Kent County and the surrounding area, you still have to price the house properly. You can't just ask whatever you want for the home, right, and expect the home to sell. It still has to be priced properly. Next, let's take a look at year-to-date new listings versus the same period 1 year ago. So again, we're looking at the first 5 months of the year. And in this category, you can see we are down at 17.99%. That is a huge drop year over year. Now, when we look at this in a numerical format, we can see for the first 5 months of 2023, there were 3,110 homes listed in Kent County. In 2022, for the first 5 months of that year, there were 3,792 homes listed. The difference, 682 homes, or 17.99%. When we go to the bottom of the chart, start at 2016, work our way up, you can see the trend. You can see year over year over year, there's been fewer over time, right? Fewer and fewer homes listed. And we're still, we're way below where we were even in 2020 when COVID hit, right? In the real estate market and a lot of industries, right, including real estate, were shut down. We really couldn't do much of anything for many, many months. And, the numbers have just continued to drop, okay? So you've got fewer and fewer homes. The trend is here in the Grand Rapids area in Kent County. Year over year over year, over the last 8 years, we can clearly see it. There's been fewer and fewer homes coming to the market, fewer homes for buyers to choose from. And as there's still a lot of demand for homes, new household formation, as we talked about, right? There's, and guys, even at the pricing, right, we've seen housing prices go up quite a bit over the last 8 years here in Grand Rapids, as we've already discussed. This is still one of the least expensive areas in the United States to live, especially for a good-sized city where there's nice amenities. We've got the seasons. I mean, all the benefits of living here in Grand Rapids, right? The greenery, the water, everything we've got, okay? And this is still one of the lower cost areas to live in the United States. So there's going to be increasing demand. And a lot of my clients, guys, are coming from other states. And I get calls, on a regular basis from people all over the United States talking about possibly moving to Grand Rapids, okay? So this area will continue based on everything I'm seeing, will continue to be in demand for many, many years. Next, let's take a look at year-to-date closed transactions versus the same period 1 year ago. And in this category, we're down 12.68%. Now, when we look at this in a numerical format, we can see that for the first 5 months of 2023, there were 2,568 homes sold, actually closed, right, in Grand Rapids. Compare that to where we were in 2022, 2,941 homes. The difference, 373 homes, or 12.68%. Now, let's go down to 2016 and compare where we're at now versus where we were 8 years ago. And guys, this is where you can really see a dramatic difference. In the first 5 months of 2016, there were 3,729 closed transactions. This year, so far, we've had 2,568, right? 2,568. The difference, 1,161 fewer homes sold so far for the first 5 months of 2023 versus where we were in 2016. So, guys, when we talk about, again, a slowing real estate market, this is what is happening, right? It doesn't mean just because there's fewer homes being sold, right, fewer transactions, that's a reality. We're seeing it right here in the data. It doesn't mean home prices are falling, okay? It just means there's fewer transactions. So the real estate industry itself is under contraction here in the Kent County area, right? There's fewer transactions, there's fewer deals getting done, fewer homes coming to the market, fewer opportunities for those of us that, I mean, the reality is, right, there's fewer opportunities for those of us that work in the real estate business to do a deal because there's less inventory. There's, still demand, but there's fewer homes coming to the market. There's fewer transactions getting done, okay? And so that's where we're seeing that contraction in the real estate business, but that doesn't mean that home prices are falling, as we've already seen. Next, let's take a look at the average months of inventory in Kent County. And what we can see is for the first 5 months of 2023, we're running 0.8 months of inventory. It's about 24 plus or minus days. Now, what this means is that based on our current sell rate, if no new homes came to market, we would be completely sold out of homes in an average of about 24 days based on our current run rate. And when we compare that to where we were in 2022, we can see that we have lower inventory than what we did last year, and there was a tick up from an average of 18 days of inventory to 27 days roughly of inventory in 2022, but now we've gone back to 24 days of inventory. And then, guys, when we look down, the largest inventory we've had based on average months of inventory, and in this category I have more data available to me so I can run this data back to 2013, but you can see in 2014 we were averaging 2.3 months of inventory. And guys, what I can tell you is that 2.3 months of inventory is still really low inventory, and here we are about a third of that right now, okay? So this is really a problem from an inventory standpoint in the Grand Rapids area. So why does inventory matter? Well, as we can see here, if you have between 1 and 2 months of inventory, you probably are going to experience double-digit price appreciation on homes. And that is exactly what we have seen for many years here in the Grand Rapids area. If you're running between 3 and 4 months of inventory, you would generally experience single-digit price appreciation. If the inventory built to where you had between 5 and 6 months of inventory, this is more of a normal, balanced, or neutral market where you might experience some price appreciation, but it would more than likely be in the low single digits. And if you're under 5 to 6 months of inventory, this is considered a seller's market, and that's exactly what we have seen for many years here in Grand Rapids. If you're over 6 months of inventory, this is considered a buyer's market. And if your inventory built to between 7 and 8 months, that's when you would most likely experience single-digit price depreciation. And then if the inventory built to 9 months plus, that's when you would likely see double-digit price depreciation. So 7 to 8 months of inventory, single-digit price depreciation, 9 months plus, that's when we start to get into double-digit price depreciation. Are you looking for a realtor you can trust? If so, look no further. When you are ready, let me put my decades of sales and business experience to work for you. Call me directly at 616-258-4782 to discuss your situation or to just talk about real estate. I look forward to helping you succeed. Once again, that phone number is 616-258-4782.